Hello everyone, welcome to Smart Investing. So this is the continuation of the banking services sector, also known as the banking sector. So we have, even though I have 3 stocks, it's really actually 2 that we're going over because this one actually got delisted. I'm going to show you that real quick and then we'll jump into the other 2. So again, welcome to the channel, guys. Smart Investing. My name is Albert. I'm not a licensed or insured financial advisor. What I do is evaluations, and I do evaluations in real time. So again, this is as accurate and most up to date of a video of these stocks, of the information that I'm being provided to you guys. So I can assure you that, my work is accurate and it's being done in a timely manner. So I hope you guys, take the feedback as is, learn from it, and I hope you guys make a final decision as to, what is the best decision for yourself. So again, in order to make a final decision, you're entitled to your own decision. I cannot make that for you. Again, since I'm not licensed or insured, I cannot make final decisions or any kind of recommendations. The only thing I can do is suggest a yes or no answer for a watch list. So that's all I can provide for you guys. Again, I have to respect people's opinions and people's ideas and their choices. So again, I'm just providing you feedback, information, and some knowledge. So for the first stock that I have, again, now we're really going to jump into this. I have actually ticker symbol SOFI, SOFI Technologies. I went over this last week, but this is like maybe a different class of shares or different ticker symbol for some reason. So this is in the consumer lending industry, and again, you can tell. Hold on. You can tell it has been delisted because the charting here is from 12/6. See, we have 2021 and then 2021. So nothing for 2022. So again, and then it has no volume, no market cap, no anything. Has nothing, no info here. News is like, I don't know, that's just random news from other stocks. So yeah, look, nothing in analysis, nothing for technicals, nothing found. Let's go to here. See, nothing for 2022. Nothing there for 2022. And then 2023 is already over. So even if they did continue into 2022, I still don't have 2023 results, but sooner or later they'll be coming in. And again, there's nothing on here. So we're just going to move on to the next one. So again, if you have that stock on your list or anything related to that, the original ticker symbol is SOFI, SOFI. So again, if you have that similar ticker symbol, again, I would say no. I will recommend no for that stock. So take it off your watch list or whatever. So it's not a good stock to invest in. Next one up is ticker symbol LOB, Live Oak Bank Shares. We have here the ticker symbol LOB. It is at $42.14. Markets are closed. Today is January 23rd, 2024. And we have here market cap at 1.87 billion. 139,000 in volume. Then we have here dividend of 12 cents for the year. It's horrible. Earnings are pretty low. 52-week high and low. That's respectable. PE ratio, we have 32. That is pretty high. And I do not like that. It's way too high. Next earnings report will actually be, this is 124. What's it, the 23rd or 24th? So tomorrow. It's actually showing tomorrow. This might be inaccurate. You know, we will gets mixed up on the dates every now and then, so I'm not sure. Looking at the chart, we have here the 5-year. You see that downtrend. I mean, it's just beating its 200, and then now it's slightly starting to move up. I don't know if you see that little bump up. It's a slight move up. But again, you have the 5-year charting, and then the 200 EMA is at around, I don't know, 35, 36. See, on the number it's showing me 36. So let's see that. So anyhow, we have a low of about, in 2023 in May, we have a low about 21. So it's being this 200 EMA. And then in 2020, it has gone to 17. So you see these big moves up, then it's going down. And it has not held up since. Then we have here for the year, it's at its high because we're at new highs. Very unbelievable anyway. So many stocks headed to new highs. So I'm not surprised. Let's look at some analysis here. So momentum is at 9. Growth, I don't see any growth. Income, I don't see any income. Value and quality, I'm just going to say no, no, and no. We're going to move on to, you see here real quick. 5 analysts have rated this. So 3 of them said hold. 2 of them said yes for bullish. Short term, it says it's bullish. Medium term, bullish. Long term, to be determined, looks neutral. Overall rating for their quants, they have a 2 out of a 5. I don't see that happening. The volume is pretty weak, to be honest. That is pretty weak. For financials, we have here earnings almost going into negative territory for estimates. And then it says in Q3 they have beaten their estimates by a wide margin. We're talking about close to, I don't know, 90 cents a share. And then their estimate for Q3 was about, I don't know, we can say 0.4. So they did okay with that. ROA was at 2%. ROE a little above 20%. Not bad. Earnings are about the same. So in 2021, 3.7, and then in 2022, close to a 4. Margins have dropped, which is expected. Then in 2022, still about the same. So ever since 2020, a 92% debt load. 92%. This was 92%. You know, that 92% range. It's awful. Net income, then we have revenue. So net income at 176. Revenue of 565. Balance sheet looks like crap. Operating and investing and financing we have here 124. Wow. So they are cash flow positive. They are cash flow positive, so they can afford a dividend. And again, this market cap is close to 2 billion. So I'm shocked. I'm actually shocked for a small market cap bank that has positive cash flow. So congrats to them. They're doing okay. So would I say yes to the watch list for this one? It's hard to say. It's really hard to say. Their market cap is pretty weak, which might put them at a negative factor. Wall Street likes these bigger cap companies, you know, around 10 to 12 billion minimum. They might see that market cap and think, oh yeah, it's more risky because they have less capital and just, you know, just less money involved in the business. So would I say this stock would be okay to add to it? I guess. I wouldn't add this for the dividend or the income. I think the only reason this would be nice is because technical reasons. I see a short-term move there. You know, it's above its 200 EMA. I'd say get in, get out. So, you know, for the short term, I would say yes for the watch list. So yes for the watch list, but it will be short term, 6 months or less, 3 months or less. Sorry, midterm would be 3 to 6 months. Anything over 6 months, I consider that long term. So LOB did okay. I just hope their cash flows don't go negative. And again, I don't have 2023 results, so if I did, that result of the rating might change. Next one up is CCB, Coastal Financial. So Coastal Financial, we have a weak market cap at 553 million. Stock is at 4161. Looking at the chart, it is above its 200 EMA. We have the 100 here, and then the 200 EMA as well. Then, I mean, you see this big drop in, what was it? March of that year, it dropped, and it slowly picked up all the way up until like July. Then it dropped again, and it went up slightly, then it's going down again. That's these really big swings going down. So even up until now, it's still struggling to, you know, break out those highs ever since last year. Yeah, it's just been crazy. Looking at the other numbers, it does not pay a dividend. 52-week high and low, a difference of 10. So that checks out. That's not bad. Earnings is at 3.57. Very respectable. PE is at 11.6. So that's not too bad. So for the analysis here, we have 4 analysts. So 2 of them said very strong for bullish. And then the other 2 were just regular bulls. So overall, it had 100% for a buy rating. Again, I don't want to go off of that because They always say buy for anything. Overall rating for the quants, 2 out of 5. Income has nothing. Uh, Value has really low rating. Highest is growth. So I will look into the news for that. I don't know why it's growing, how it's growing. Maybe people just like the stock because they're managing well. So we can look into that right now. Looking at the financials, you see these earnings expectations kind of go up. And all of a sudden in 2023 for Q3, it starts dipping down. Really big drop for Q4. Expecting around, I don't know, 72 cents, 73. That's down from an expectation for those results of about 93 cents. Doesn't seem like much, but when all those numbers add up, that's a pretty big deal. You can see here in Q3 2023, really big miss, and then that I believe that's why they lowered their expectations for Q4 earnings in 2023. So I guess it can be in line with estimates, and I guess they want them to beat those expectations so the stock can go up. Maybe that's why it has that growth rating of what it is. Key indicators we have here, ROA is at 1.41. ROE is at 18.2, which is really high. Earnings per share is at 3, not bad. Net margins at 13. Compared to the last 5 years, that's the lowest net margins they had within the last 5 years. That doesn't look too good. Debts are still around 92, so obviously still above that 90%, which is pretty horrible, I think. And typically banks carry around that debt level, but it's always nice to see debt being paid off. But I don't see that for banking sectors overall anyway. Net income is at 40 million. That's been highest to date. 2022 revenue is close to 300 mil. So that's like an 11% gain. This is 13.7. So who knows? I guess 13, close to 14%. It's actually not a bad margin. I don't know if you can consider that the growth rate. But nah, they're doing okay. So we have, okay, balance sheet of 90, cash flow. Most important factor, so we have 67 mil. 960. So they have negative cash flow. I'm trying to do the math. So 510 million. They have negative 510 million in cash flow. So that is negative cash flow. So if you have this stock, nope. Do not recommend to a watch list. Don't recommend to buy it. Not even for options. Nothing. So there you have it. Thank you guys for watching. I'll see you guys in the next one.